gotta start having some self-accountability. Y'all probably hate me, so thumbs down me or thumbs up me or comment and tell me that you can't stand me. Comment and tell me that you hate me. We are gonna have to have a heart-to-heart about why you bought a house and now you can't afford it. Hey y'all, hey, I'm Joy Bailey. I am the mortgage boss on all my social media platforms. Please follow me. I am a mortgage loan officer here in Charlotte, North Carolina. I'm licensed in multiple states. I have been a mortgage lender for almost 10 years. And I have done purchases as well as refinances. And most recently, I am getting an influx of calls or people that are wanting to trade in their 2.5%, 3%, 3.5% interest rate for a 7% interest rate because they are overwhelmed with the amount of debt that they have accrued in the last 2 to 3 years. So this whole video came about because I was on TikTok and a young lady was venting about how she felt like loan officers and realtors were trying to push her into buying a house last year in 2023, and she's so glad that she didn't buy a house last year because when they were trying to convince her, they said, oh, well, you could just refinance next year and then, you know, the payment will come down and yada, 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 yada. We've all heard it.
Last October, I posted a video about why I decided to not go through with purchasing the home that I was going to buy on a fucking, I think it was like a 6.5% interest rate, even though mortgage lenders and realtors were telling me to buy because I can always refinance later. I did not go through with it because I did not want to be house poor, which is exactly what would have fucking happened had I went through with that. It is now about 6 months later, 2024. Where the fuck do y'all see Jerome Powell about to cut interest rates? I'm only 25, recently, fresh 25, recently turned like 2 weeks ago. And even I knew this fucking economy was in the gutter. So for you guys who have been in this industry for over a decade to sit here seeing the signs that y'all saw and to still influence and persuade people to go through with purchasing these homes because you guys wanted to make a quick fucking buck, you're going to hell. It is now Q2 2024 and I've seen fucking maybe 20 TikToks about people either in foreclosure or about to go into foreclosure. And this is why I always say it's so important to live below your means, because in reality, especially if you're middle class, we're all about a layoff away from going into foreclosure or being evicted from our fucking homes. Truly. Especially in this fucking economy. It's taking people damn near about a year to find a new job. And even then when they do, it's not paying what they were getting paid before.
And so I did a response stitch to that, right? And so right now I think it's like 35, 40,000 views. And basically I said a couple of things. One, I said that people like to be lied to. And as a viewer, you watching this, you might be like, click, I'm not gonna hear this bullshit because she's trying to blame me for my problems. And I am. Yeah, I am. Because y'all have to be willing to accept the good and the bad side of the decisions that you all are making, because what tends to happen is people are overly reliant on realtors and loan officers to make their financial decisions. Thing number one, we are salespeople. Let's be super duper duper clear. We are sales people. We are not supposed to lie to you, but you know, whatever gets the job done for some people. I'm not in that camp. I could have made a whole lot more money in 2023. And if you want to know how my 2023 was, I'm happy to insert a video somewhere so you can get that side of things. But I could have made a whole lot more money in 2023 if I was shoving a 3-2-1 buy down people's throats. If I was shoving a 2-1 buy down people's throats. Creating a false sense of comfort, a false optimism into them. I lost a lot of business because when I presented my interest rate, which translated into the payment alongside with whatever the minimum down payment and minimum closing costs were going to be, people didn't like it. They didn't want to hear that. So what people do, the reason why I say people like to be lied to, is because we collectively as a society, we want to feel like we won. We found the best deal. And when you're in a position where sometimes there is this thing that you want so bad and it's becoming elusive, like it seems to be getting farther and farther away, and somebody offers you a flicker of hope to say, oh no, You can get the thing that's getting farther and farther away, but you just got to do it like this. And the do it like this is more closely aligned to the way that you saw things going. You're gonna go that way, and you are going to throw caution to the wind of why you probably couldn't have or shouldn't have been in that scenario to begin with. So let me give you an example. This is a true story. I have lost a deal when there was a situation. Well, now, hold on, let me back up. I'm gonna say this universally, and then I'm gonna give a specific example. Like universally, if somebody comes to me, I am not a preferred lender for any home builder. So when they come to me, I'm giving the full payment. I'm giving whatever today's market interest rate is, and I'm assuming that you're paying for everything. And so when I say, all right, this is how much you qualify for, they might look at me and like, okay, you qualify for 250 or you qualify for 275. What that person then chooses to do is beyond me. But I'm gonna tell you what does come next. What comes next is the realtor will be like, oh, that ain't enough. Let me take them over to the new construction so they can try and qualify them for more. So that's strike number one. You all want to shop for the answer that you like the best to get the answer that you want, not accept life for what it is by getting the answer that you need to hear. That's not on the realtor and that's not on the loan officer. So the reason number one why you can't afford the house that you bought 2 years ago is because you went for the answer that you liked the most versus the answer that was the real answer. Thing number two, people are on the internet and they're like, oh my God, I can't believe that my taxes and my insurance went up like this. Yes, because you went to the builder to get the answer that you like, and the builder gave you taxes on the dirt. You can't come to the internet crying and complaining because when you talked to me and I told you that you qualified for 250 or 275 and you just had to have the 300 or the 325. Well, I mean, I don't know what to tell you. It is what it is. Like, this is where you are. These are decisions that you've made. So, other point that I was going to make. So, back to, like I said, what I was saying on the social media, whatever. When I was like, people like to be lied to. We aren't just necessarily blatantly telling you lies, right? We as salespeople, most of us, some of us, it could go either way, might give you the most optimal outcome. And when you hear the most optimal outcome as a consumer, because sales is nothing but psychology, that's the only thing that you hear. You willfully throw away all of the downside and you willfully throw away all of the negative that could happen. So for example, with a buy down. So the big thing on the market that came out like in 2022 when interest rates started going up like to the fives was the 3-2-1 buy down and the 2-1 buy down. And the way that works is that you let's say I'm pretending. Let's pretend that at that time the interest rate was like, let's say the interest rate was 6%, right? And so you were like, oh my God, I didn't know the payment was gonna be $2,000. That's a lot. In your head, you was like, oh, I want $1,000 payment, right? And so as you were trying to shop around, trying to figure out how you was gonna get into this, I don't know, I'm making this up. I have no idea if these numbers match up, but just follow me. You're trying to figure out how you was gonna get to $3,000 house for $1,000 payment. Somebody stepped into the picture and said, you can get this house for $1,000 if you get a 3% rate. The market rate is at 6%. When you talked to me, I told you 6%. You found somebody that said, oh, you can have a 3% rate. And when they said on a 3-2-1 buy down, which side note, the way it works is the first year you get a 3% rate, the second year it goes up to a 4% rate, the third year it goes up to a 5% rate, and then the beginning of that fourth year for the remainder of that term, you're back at the 6% rate. So while the real life payment for that house might have been $2,000 a month, you was like shivering and shaking on the payment because you just couldn't believe you was being knocked over practically with a feather because you was like, oh, I didn't know a house would cost that much, right? But they said, oh no, you can have this payment for $1,000. And then the reason why I say they lied to you, y'all fell for it. Now I ain't gonna say fell for it because that's the wrong way to say it, but y'all went for it and y'all was like, I want that $1,000 payment. F what Joy told me. Joy told me I could only get a house for $250, and I can get this $300,000 house for $1,000. I'ma show up. And so you bought into the idea that this overly projected optimism. You bought into this notion that, oh, all you gotta do is refinance when the rates come down. Nobody knew when the rates was gonna come down. Nobody knew how high the rates was gonna go. Nobody knew if that 3% rate would even ever be an option. But if the seed was planted in your head that you could get and keep this 3% rate and keep this $1,000 payment. Remember, also this is new construction, and so with the new construction, you didn't factor in that your property taxes was gonna go up. You didn't factor in that the insurance could possibly increase. It's a whole lot of things that happen here, right? So then you got this camp of people that's like, it's the realtor, it's the lender's fault because they put people in a bad position because they even introduced the idea. So if the person couldn't afford the 6% interest rate, they shouldn't even offer them the buy down. Wrong. So let's talk about that. You, as a buyer, the reason why you cannot afford your house today is because of the following. Y'all, when we qualify you with those type of like 3-2-1, 2-1 buy down strategies, one, you have to realize what you can afford versus what you qualify for is two different things. We are not financial planners. We are not financial advisors. We're not attorneys, okay? So I'll come back to that point in just a second. So when we qualify you, we are going to qualify you with that higher payment. So again, keeping that same example, let's say that the actual rate at the time was 6%, but you walked away from the closing table and you got instant amnesia because you had the 3% interest rate, right? For that first year. The lender is not responsible or cannot be held accountable for the way that you structure your life after you leave that closing table. We've qualified you at the worst case scenario, and 9 times out of 10, because I see the people on both sides. I see the finances of the person when they initially enter into the purchase agreement, and now here we are 2-3 years later, and the people are reaching out because they struggling with their finances. So I'm saying this from 2 vantage points, okay? When you qualify for that house, that was already, that 7 or 6% interest rate was already at the top of your budget, and you knew it was at the top of your budget, and you was trying to kick the can down the road and buy time for maybe you to get a raise, or I don't know, maybe for the rates to come down, or whatever the scenario was, because you knew in your heart, mind, body, and soul, the debts that you had, the outside of your credit report, that wasn't going to make that an affordable payment for you. So you got the $1,000 payment at 3%. As the lender, we cannot hold you accountable for you structuring your real life around that 6%. That's going to be $2,000 a month. If you leave the closing table when you left the closing table, you as a buyer, you decided to go out and buy a new car. We can't factor that in. We can't make projections about what you might do. You, as the buyer, went and had twins, and now your twins need $2,000 a month daycare. We can't control the way that you procreate, like, or not. Like, that's not on us. That's not our business, right? So when you signed up for the 2-1, 3-2-1 buy down or whatever it was, and you had this temporary payment, your buying decisions after that, 100% on you. So then you have the people that's like, oh my God, like, y'all are responsible because I remember back during the crash, this one lady was like, oh, I remember back during the crash, I was working for high balance mortgages, and every single person that was having trouble making their payments was advised improperly by their realtor and by their loan officer. Pump your brakes. We're going to stop and put a pin in it. Let's talk about it. That's back in the day. Let's talk about the way that it works today. Today, you receive 2 sets of disclosures. You get your initial disclosures that outlines all the terms, conditions, details, and everything that you need to know about that loan and about the loan process within 3 days of us taking that application. You are supposed to read through it, and you guys sign individual pages saying that we gave it to you and that you read it. Now, if you actually read it, that's on you, but the information is provided to you. In that initial closing disclosure packet, you are giving a list of home counseling agencies. Those counseling agencies can talk to you about credit. They can talk to you about budgeting. They also offer home buyer education classes. All of these things, y'all. These disclosures and these companies, these entities, they're separate for a reason. Okay, so the home buyer education courses that are required are not provided by loan officers or by realtors, because by definition, that's not our job. I have a Master of Arts in teaching, so I will do it, but that don't make me special. That just means I'm going above and beyond. So when you break up with me because you didn't like the fact that I qualified you for a particular housing payment and you give my commission to somebody else, you're just more prepared. That's all, right? So that's something that I do, but going into the weeds of things, I'm just being honest, is not technically our job duty. Okay, so that's home buyers, home counseling agencies. So still sticking with that initial closing disclosure pack, initial disclosures packet that you get at the very beginning of the process. So you get your initial disclosures, you go through and you sign and everything, and it's like, don't commit fraud, this the type of loan you signing up for, you got to take this class, it's going down the thing. So if you don't understand the terms and conditions of what you're reading, and like I said, going back to the comment that the lady was like, it was all the loan officers and realtors' fault back in the day. We talk about today in 2024. We're talking about post-crash. There is a closing attorney's name on your contract. An attorney provides legal advice. Your loan officer and your realtor, we are not licensed to provide legal advice. No matter how bad you might want us to provide that advice, that's not our job. That's not our job. We literally are not equipped to do that. So if you need that and you're going, into the disclosures and like, well, what does this phrase mean? Call the closing attorney and have those type of conversations with those people. So here again, we're providing you with the tools that you need to be successful. Whether you choose to use those tools and leverage those tools, that's on you. Something I left out, editing me here, something I left out. Financial planning. Y'all, a financial planner is not a loan officer, and a loan officer is not a financial planner. That's the part that I meant to touch on. But just real quick, just to super duper clarify, I think people be giving loan officers way too much credit and way too many job hats to wear. A financial planner is somebody who is going to assess your whole entire life. Your budget for your food, for your daycare, your diapers, your milk, your wipes, getting your grass cut, your electricity bill, car payments. They're going to do all of those things. That ain't our job. We don't do that. So when people are like, well, you knew that this person couldn't afford such and such and so and so, our job is not to determine their affordability. Our job is to determine what they qualify for based on a very specific formula. Anything beyond that is technically outside of the scope of my expertise and what I'm licensed to do. So I hope y'all understand what I'm saying when I say that. It's not like I'm trying to just be like you, but I gotta make sure that y'all thoroughly understand why a lot of people are in the situation that they're in, because it's not always us, and we can't be a dumping ground at people's convenience just because they don't want to feel like they're responsible for the situation that they're in. So we're not financial planners, we're not attorneys, we are loan officers, we We talk about interest rates. We talk about loan products. We see if your numbers can fit. If they do, we're going to move you on to the next phase of the process. So, okay. When you get to the end of the transaction, so you go through everything, we are qualifying you, okay? We determine your ability to repay. No, we're not setting you up for failure necessarily, again, because like I said, nobody's forcing you into a 2-1 buy down or into a 3-2-1 buy down. These are choices that are being made because you didn't like the answer that you got the first time when you talked to somebody like me. So you shopped around, you found the answer that you like the best, right? And you hoping, wishing, praying like, oh yeah, the rates are gonna come down and I could just refinance, and not realizing, no, you just can't just refinance. You gotta qualify to refinance, but that's a whole nother conversation. So anyway, so we get all the way through everything. Closing day is on the way, so you get a second set of disclosures 3 days before closing. That is 72 hours before closing. We send the documents to you and you have to sign. If you don't sign 3 days before, we have to push the closing back. It's that big of a deal that you have this window of time from the time that we provided you this information to the time that you sign on the dotted line. When you receive your closing disclosures, you are supposed to read through it, understand everything, and you sign saying you're acknowledging that we provided you this information. You got 3 days to get comfortable, read through all your closing papers, draw a hot bath, turn the lights down low, light a candle, whatever it is that you need to do to be comfortable with the time that you are going to spend reading through each line item, every paragraph, every subsection, everything. You got time to take notes, write down questions. 72 hours before you actually get to the closing table, before you actually have to write the check, before you actually wire the money. You're getting all this information. Now, whether or not you choose to actually read it is on you, not on us. Now, let's say you signed everything and you get to the closing table. Anytime I be into a closing attorney is going to go through, okay, this is this document, this is the translation of what it's saying. Did you read it? Okay, you did. Do you got any questions? Do you understand? They gonna take their little notary thing. You sign here. They gonna be like, sign, and then boom. There you go. Notarize. Next document. They tell you, okay, you understand, and you like, yeah, I understand, and then you whatever, and then you get all the way to the end of everything, and now you got your keys, you taking your pictures, you hype, you excited. And if you anything like me, the very first thing that I did when I closed on my house, I think I signed my documents at like 11 o'clock in the morning. By 11 p.m., I had $5,000 in credit card debt because I immediately went to Home Depot and Best Buy because I had to buy a refrigerator and a washer and dryer. Is that my lender's fault? No. That's me. That's on me. Once you alter the conditions of which you've been underwritten, that's on you, not on the lender. If you have been counseled, so to speak, or you've been provided with all of the different options and you choose the option that you feel like is the best deal for that time, okay, cool. But it is not our responsibility to babysit your buying decisions after you've left the closing table. And so I don't know if this is going to be like mean or harsh or what, but I deal in reality. And like I said, I could have done so much better financially if I was more willing to not present the worst case situation and only focus on, oh, all you gotta do is refinance, and like downplay, the fact that you have to fully qualify again with your credit and your debt and your income to be able to get a lower rate if the lower rate ever comes. Because at this point, like I said, the example I was using was from like 2022. We're now in 2024 and interest rates are over 7%. So will rates fall down to 6%? Maybe, possibly, probably. But will they go down to 4%? It's highly unlikely. It's highly unlikely. So if you shop till you drop based on a scenario that is never going to present itself again, what can we do? We can't do anything. So I wanted to present this, like I said, because I wanted to get this out and get this on my chest. So yes, while there were realtors and loan officers that overplayed your hand, I ain't gonna say they overplayed their hand, by saying, all you gotta do is refinance. Don't worry about it. It's cool. It's easy. You should spend, if you get $10,000 from the seller and you just buy your rate down, you'll save $70 a month. But you should take that $10,000 and do a buy down, a 2-1 buy down, or a 3-1 buy down, and you'll save $400 a month or $600 a month or whatever the number was. That's the only thing that you heard. That's the only thing you needed to hear because it was an answer that you liked the most. It didn't necessarily mean that that's what you could really afford. So I just think it's important to put this out here because all I'm seeing on social media is all these different videos on YouTube, on TikTok, where people are complaining and crying about how they can't afford their house. It's not the realtor's fault and it's not the loan officer's fault. They served what they were supposed to serve. Their job was to find a way to get you into the home. Some of us are going to present the negative and kind of stay on the downside and encourage you to take a higher payment. Some of us are going to focus on the most optimal situation and never discuss the fact that, well, you know, like, we don't factor in your grocery bill. You know that the taxes are just on the dirt and your tax bill gonna be higher. Some of us don't focus on, well, you know, it's super unlikely that the interest rates are gonna get to 3% or 4%. They don't have those conversations. Or if they do, they might sort of kind of gloss over it. But again, I just want to really shine a light on the fact that, yes, the economy has shifted. No one has a crystal ball and can forecast what will and won't happen. Mortgages, just like any other financial product, are risky. 401ks are risky. Nobody can tell you that you throw your money into a 401k for 40 years and then all of a sudden a downturn happens and now you done lost all the money that you've invested. Like, nobody can tell you that that will never happen. It's an element of risk across the board. And as a person that is acquiring an asset that is relatively safe, the more unstable the loan product is and the more opportunities there is for the payment to move around a little bit, the more risk that you're taking on. I have had people that dumped me because they wanted a zero down loan product where a realtor, it's not the realtor, a zero down product where the builder or the seller, whoever, was gonna pay their closing costs. They feel like they got a great deal because I ain't have to spend no money. I ain't had to buy a house. But you got a 5-year arm, and sweetheart, you 3 years into your 5 years. 3 years into the 5 years because you didn't like the numbers that I gave you. Whose fault is that? It would have been better to go with the worst case just to be safe than be super aggressive. And now 5 years, a whole lot can change. You're not with that girl no more. You're not with that boy no more. Things change all the time. But we cannot, and I'm not, Gary, just let the whole wide world shift the blame to the lenders and to the realtors. Because you're adults and you were presented with multiple options. And you shopped around for the option that you liked the best. And you went with that option. And so now, you are where you are. Hopefully, it's going to work out favorably. Is there going to be this unprecedented wave of foreclosures that happen just because people went with a particular product? No. Pick up the phone, call your loan servicer, get the loan modified, case closed. Like, am I oversimplifying it? Yeah, a little bit. But there are some options that are available if you find yourself in a situation. That's what makes 2024 different than 2008. It's not, I mean, it is history repeating itself a little bit, but it's not, simply because there's more information that is provided up front. There's more education opportunities provided up front. There's more uniformity to the process, more uniformity to the documents, and more uniformity to the solutions. If you struggling, child, call them people. Call them people. Call them not processors, Lord. Call the loan servicer. I'm struggling. I can't make my payment this month. They're going to be like, okay, chill, don't worry about it. Like, you want to put it on the back of the loan, but are you going to be able to make your payments the next 3 months? Okay, the next 3 months we can put them on the back of the loan. Here's a document, sign this document. They'll modify. Y'all, they don't want your house. But that ain't the point. The point of this is we ain't ready to be blaming the realtors and the loan officers. The reason why you can't afford your payment is because you can't afford your payment, because you chose to take what was easy at the time instead of taking what the reality was for the long term. So that's that. I had to get this out. This is long. But anyway, y'all probably hate me. So thumbs down me or thumbs up me or comment and tell me that you can't stand me. Comment and tell me that you hate me. Comment and call me a B word or whatever it is that you need to do to get it out. But just comment. Give me some feedback, like it. Tell me what you think. Do you think I'm wrong? Do you think I'm right? Because I need the engagement. That's all I got. Subscribe if you liked it. Subscribe if you hated it. I'm the mortgage boss. If you would like for me to talk to you about your home loan, all of my contact information will be below. I would love to earn your business as a loan officer. Y'all have a great day.